All right, well, good morning, everybody. Thanks for being here. How's everybody doing?
Good. How are you?
Good, good. I'm Tony Moore with Gulfside Mortgage Services. I actually brought the whole crew here, almost the whole crew today, so we could introduce everybody and so you know who they are. So there's multiple ones of us here, right? We have 5 different loan officers, 6 different loan officers. Our newest one is Kevin, which you guys probably know the most. But he's been doing loans for a while. So Kevin, if you wouldn't mind, come over this way, tell me who you are, so it's on the camera, we can get that taken care of. And
Hi guys, I'm Kevin
Tell me your favorite
Corbett.
hobby.
My favorite hobby is CrossFit, and I like to eat. That's all about me.
how long have you been a loan officer?
2006, I started originating loans.
What do you love about it?
I love helping people achieve the dream of home ownership. I think it's an amazing opportunity to serve our community, help them to build generational wealth through real estate.
Awesome. Thanks, Kevin.
Am I good? Angie Vance, Gulfside Mortgage. Been in the business for 12 years. No, since 2012. Been with Gulfside for over 8, and I think my specialty, I guess you can say, I work a lot with like bank statement loans and self-employed people. I just helped a realtor with a 1099 loan statement loan, and I like to think outside the box if I can.
So you like to do crazy stuff.
I don't like to, but I do it. I've become special at it because I've learned all the guidelines and all the quirks and things like that. So.
Awesome.
Yep.
Thanks, Ange.
Yep. Thank you.
Hi everybody, Caroline Fissel. I started in banking in the late 90s and then came aboard Gulfside in 2013. What I enjoy most is helping people save their home. So I'm a reverse mortgage specialist. I've been helping the elderly being able to stay in their homes when they can't afford it anymore and to be able to live, a normal lifestyle. So I just enjoy helping everybody get into a house. So
Your hobbies?
My hobbies are watching NFL. Go Giants.
Not a fun hobby, baby.
No, but I'm still, through and through.
So I'm Anthony Lozano. If you've seen any of my branding, I actually go by the mortgage.
Other side.
Other side.
No, you're sure.
Mortgage doctor. Obviously, I'm getting older and I don't see any well anymore, so I need my own doctor. But yeah, been originating since like 1995, 1996, like Tony. My hobbies are lately pickleball. Played 2 hours last night and I'm hurting. Not proud of it. And mountain biking. So young man sport. I try and keep healthy like Kevin here. I am Cuban, so I do speak Spanish. I can help you grow that business as well. And I love rescuing loans. They make fun of me whenever I get them that the banks turn down. So I love doing stuff like that. I love helping you guys grow your business. So think of us when you got some issues or have someone in Spanish.
Thanks. And of course, I'm Tony Moore, and if you guys don't know, my wife and I did not start the company, but we were the first 2 hires onto the company back 23 years ago, or 22 years ago, and I'm the only one left. My wife's kind of worked for the company, don't get me wrong, she still does a lot for us, but we took over the company in 2010. We obviously had a lot of great people, and I wanted to bring them out today because if you don't know them, I want you guys to know them. They're available just like I am. To help you with anything you need. I know some clients would prefer to work with somebody who actually speaks their own language, with Anthony and somebody who speaks Spanish. Some clients might rather work with a lady instead of a gentleman. That's fine, right? Our job is to find the best fit for you. And if you work with one of us and just let us know, hey, I'm gonna refer somebody over to Anthony because he speaks Spanish, or to a lady because she prefers to speak to a woman, that's completely fine, right? Just let us know. We're a team, we don't mind that. We're here just to help you guys out. That's the bottom line. So anyway, we're gonna get to our presentation. Thank you guys very much, I appreciate it. Next up, I have Sammy from Goosehead Insurance, and Sammy's gonna introduce, and she's gonna talk about flood stuff for us, right?
Yes, 4 points, wind mints, and flood. Insurance basics. But yes, I'm Sammy, I'm with Goosehead Insurance. We're in downtown Sarasota. I've been doing this since I graduated college, which was only 2 years ago, from the University of Alabama, so roll tide. But yeah, so we'll get to this. Let's see, 4 points, wind mints, and flood. So we'll just go over basic hazards on 4 points. These are the age of roof guidelines, which I'll go over as well. But so first, electrical panel brands matter on 4 points, which a lot of people don't really know. supposed to stand over here? Hold on.
Yeah, I can see
Sorry. So I don't know if you guys are taking notes, but if you want to write this down for bad electrical panels, Federal Pacific, Stab Lock. If I'm going too fast, just let me know. Stab Lock, so lock without the C. And Sylvania, Zinsco, and Challenger. So 3 insurance carriers take those panels. They do not increase or decrease premium, it just limits the amount of carriers that will take the house. So like for example, last year I had a house with a Sylvania panel, the only carrier it could go to was Citizens. And right now they're not the cheapest anymore. They've taken a rate increase, so that might not be ideal for someone who has DTI issues or something like that. But yeah, that's just something to keep in mind about electrical panels. Water heaters over 20 years old will limit your carrier options as well. So that's also something like just Citizens will take, or Tower Hill, or Florida Peninsula. So we do recommend getting new ones within 15 years and older. It definitely helps with the product. And then roofs with 5 years life remaining will most likely go straight to Citizens. If a client has less than 5 years life remaining on the roof, we can bind directly with Citizens as long as there's a roofing contract in place with an estimated completion date of 30 to 60 days after closing. So another thing about that is they will require a signed roofing contract. I don't know if you want to take notes on this as well, but it would have to have the contractor's name and license number as well as the estimated completion date. And we do recommend a good faith deposit as well, just so they know it's going to get put on, because they will circle back around and we don't want your client's policy to cancel or go into pending cancellation. And that is also subject to a 10 business day underwriting approval. So, and Citizens sometimes does take 10 days. You can rush it 48 hours before closing, then they'll get it done for you. Another option for an old roof is a DP1 policy, which is a policy form that is good. You can use it on loans. It's not super bad, but it will exclude the roof, and it will suffice for closing or until a new roof gets put on. Next would be plumbing. So plumbing that could also cause problems when shopping for insurance would be cast iron plumbing or polybutylene plumbing. Most carriers do not accept those pipes. And then next would be 4.6.
What's the second one, Sammy?
Polybutylene.
What is that? How do we know what's polybutylene?
It'll say it on the 4-point. They'll check it.
Okay.
Yeah, it'll be in there. Yeah. The only thing I know how to decipher is cloth wiring, because there's cloth on the wiring, but that's about it. And 4-point inspections do not affect rates. So I know a lot of people think that, but they don't. It does affect the carrier product allowance, but that's about it. Next, I guess we'll go into, age of roof. So 10 to 25 years for shingle, flat roofs, and rolled roofs. So rolled roofs, for example, would probably only last about 10 to 15 years. Shingles could last up to 25 years. And then 20 to 50 years on tile and metal as well. All right, wind mitigation. So wind mits give credit for the way the roof is tied down to the structure of the home, so the roof doesn't blow off. They can never hurt, they only give credit. I always recommend, even if you have a 2008 home, yes, it's not required, but if the client got a new roof in 2022, it's gonna help the premium. It'll give them credit. Even if the inspector can't get into the attic, if it's a flat roof, I recommend obtaining a wind mitigation so they can at least get credit for a permitted roof, and if they have hurricane openings, that'll be a big discount as well. And then third nail gives more uplift resistance so the roof doesn't fly away. That also saves around, I've seen it up to $2,000 on an annual premium if they get single wraps or double wraps or clips. So that helps with insurance premiums. Insurance carriers like to see that.
Do you guys know what the third nail is?
Yes.
Anybody not know? I'm sure somebody doesn't. Can you tell them what it is?
Yes, so it's basically they put a wrap around the trusses of the roof to make sure it's tied down versus just a toenail in it kind of thing. So it helps it to not fly off, and then you just get more credit on it for the home insurance.
It's more support,
That's
more
basically
of a
it.
tie down to keep the
Mhm.
roof from flying off.
Yeah.
Also too, quick question for you, on
Yeah.
the last slide, you talked about the roof age. When you talk about that roof age and having less than 5 years, is it from like the day the roof was put on, or is it by when an inspector thinks that the roof life is by? What do you guys go by as far as that goes?
It honestly depends. So it's really what the inspector thinks when he goes out there. If he thinks it has 5 more years or if he thinks it has 2 more years. Citizens recently changed it from 3 years to 5 years. So when that was happening, I actually had just found a policy that was 3 years, and Citizens was like, this needs to say 5, so I had to call the inspector and butter him up a little bit to put 5 for the next year. But yeah, it's just basically based off the inspector. Yep. All right, next is flood. So, due to all the hurricanes in March of 2024, FEMA did a map revision in Sarasota County because homes in X flood zones were homes that were getting flooded versus homes in AE flood zones. We literally had clients with boats in their backyards that did not get flooded, and then everyone that was east of 75 was getting flooded, which I'm sure you all know about and you all saw all over the place. So if the seller has a current FEMA flood policy, the buyer can grandfather the rate. Policies written before FEMA's new rating system, FEMA 2.0, are at a discounted rate. So if the seller bought the house before 2022, the buyer is able to grandfather their FEMA policy. And any agent can do it. It doesn't have to be the same agent. So I can do it. But yeah, that helps save a lot. I just had one that was like $5,000, I think. And then whenever I grandfathered the seller's rate, it went down to $2,207.
Wow.
So yeah.
So it sounds like it's best for a listing agent to get the existing policy.
Yes, yes, and it has to be existing. I actually have one in my email right now. It expired, and I can't use it.
Mm.
So yeah, it has to be current. Yes. Let's see. Elevation certificates never expire. So the only thing that they need is updated photos within the last couple of months. I think it's 60 or 90 days from when you bind the policy, which I typically just get off the 4-point or from the listing photos. But those will never expire. You can use those for as long as they live. Elevation certificates are not guaranteed to reduce premium. Just wanted to put that out there. They sometimes do, they sometimes don't. Sometimes if I put the credits in and it raises the premium, I just take them right off. I don't know why that happens. It must be just something in their system. It doesn't happen all the time, but yeah, that's really it. And then next, this is a link that you guys can use to search for flood maps.
Yeah, let's see if we can click on it. Whoa, go back.
I tried to click on this one.
Yeah, I think you gotta control and click it, or we gotta just copy this. Now what? So you might have an address?
Should we do like, do you have a house that you're working on now?
I have one that I know is in the flood zone, my house I own. So so this will take you to all the counties. I'm gonna show you guys in a second how you can go to like Sarasota County or Charlotte County. Do you have to type the full address in?
Yeah, probably.
I thought it, hyper. There we go. All right, so tell us what these colors are. Do you know?
No, I don't use this. I go
Oh.
through FEMA.
This is yours, this is FEMA. This is FEMA's.
Oh yeah, I mean
This is
like their
yours.
quoting system.
Oh, okay.
Yeah, I don't
So,
use this.
so what this does is it has some colors. You can see there's different AE zones here. I know it's a little bit small. I don't know what that maximizes now. But as you can see, that house right there, it's pretty easy to notice that that one shows AE right next to it. So that color blue would show you whether it's what type of flood zone it's in. Now, there are a lot of things, if you guys ever looked at, since we looked at this one, have you ever looked at the bottom of your tax bill? Right, this section right here, and it tells you what flood zone it's in. Well, have you ever seen it have more than one flood zone? Yeah, guess what I do when that happens? I call Sammy, right, because I have no clue what that means, right? Neither do we. We don't know what it is when it says an X500 and an AE. What was an X500 and AE?
Yeah.
Does anybody know the answer?
If the house isn't in flood zone, you don't have to pay insurance, but it's
Correct.
The structure, right?
Yeah, structure.
So at that point, I don't want to guesstimate, I don't want to use what a map might show. That's when we're going to reach out to Sammy or Goosehead and say, hey, can you let me know what this is? But this will allow you, and when you look at this and see this, right, it shows you there's a certified map of flood zone. Have you guys ever clicked on that and looked actually where it takes you to see what the house looks like? Because if you do, right, you can click on it and it takes you right to the exact house, which I think I used my house there also. Yeah, I did, Anthony Moore. And it takes you right to the house and it shows you AE intersects with the parcel, right? So that is when you're on the county websites and you're looking up the tax bill, it's gonna take you exactly to show, and you can see in this example here, that, oh, let's see. Oops, I think I can't see it from here, but you can, anyway, you can change the map system. Oh, you can see it there, right? Oh, I just couldn't see it from here. So you can see this is the house, right? You guys can see that? It's kind of light, but that's the house. And you can see the blue goes right over it. And like Angie just said, if it was here and the flood zone ended, and it was blue to there, well, the house wouldn't be in the flood zone. The parcel's not in. But if it's here, you're in a flood zone. Even that much of the house, right? So no matter which portion of the house is in the flood zone,
You're in a flood zone.
you're in a flood zone. So, so that you can find. Once again, what she gave us with the FEMA website, did you guys get a copy, see that on there, or write that down? We will share that with you guys, you can see it also. You want me to read that off though?
Yes,
Okay, it's msc.fema, F-E-M-A, .gov, G-O-V, /portal, /search. And we will send this to you guys, and I can, of course, read it off if anybody get it. Anybody need me to read any more of it? Okay. But this will help you with all the counties, and not just Sarasota County or Charlotte. But when you go to Sarasota, Charlotte County Property Appraisers, that takes you right to it. And I'll tell you, I still always check with the insurance agent, but every time that I've noticed exactly what we just talked about, that it's in the flood zone, but it's not over the actual parcel at all, they usually come back and say, hey, it's not in the flood zone. But I still double check, right? We want to double check and make sure. I'm doing a transaction right now that the insurance and flood came out to over $11,000 per year, and my borrower wasn't qualified. Because I'm not putting $11,000 in when I pre-qual somebody. I'm not expecting insurance to be that much. So, so this is super important that you know. I'll tell you what, we could probably end the presentation here because Sammy, you did amazing. She gave me, I learned a lot of valuable information. I didn't know that elevation certificates never expired, which if you're listing a house, you should always ask for that elevation certificate. Why? Well, because we can get a quote real quick, but even better than that, get a copy of their flood insurance, because that flood policy's probably gone up, and if the new buyer can
Grandfather the rate.
yeah, grandfather that rate in, then we know from the go, hey, the flood insurance is $2,000 per year. Tony, Kevin, whoever, only me and Kevin are here so we can talk about us. Tony, Kevin, are they qualified with this flood price? Right, makes sense? And we can put that number in, we can find out what it is.
Yeah.
So, any questions for Sammy?
X500, is that required flood insurance in X500?
No.
So all of Florida, I think, All
in
of
a
Florida's a flood zone.
Yeah.
We're surrounded, we're a peninsula.
Yeah.
If you guys haven't noticed, we're surrounded by water, so it's pretty easy. What would the cost of a X500 flood zone be compared to?
It's pretty similar to X flood zones. I mean, to me, it's the same thing. It just depends. I had one yesterday. It was across the street from the beach on the East Coast, but they weren't in a flood zone, and it was $500.
A year?
$490, yeah, 500, yeah.
Which,
So
we
it
have
just
flood insurance,
varies.
not in a flood zone, because I've seen people get hit by hurricanes, and a hurricane with rising water is not a hurricane insurance, right?
Yep. Flood is rising water from an outside source. So if you have water rising in your home from the street or a pond behind the house, that's not covered underneath your home insurance. A lot of people don't know that. So.
Tony, I got an example for you if you wanna put something, if you wanna check something.
How about we get back to that? I just went off of it, sorry.
No.
Unless you want me to pull it up for you to
No,
see?
it's
Okay.
Oh, there you go. Sorry.
All right, so, perfect, so flood zones, that's basically where we're at as far as that goes. I talked about this, when your house is in a flood zone. So, oh, this is your last slide, did you have anything to
Oh.
talk?
Sorry, I forgot about that. This is just, we recommend clients reach out to an insurance agent as soon as you go under contract because of things like he just mentioned where he found out the home and flood was $11,000 and now the borrower wasn't qualified. Because whenever you do ballpark quotes, I mean, we don't know. Like for example, like I just mentioned about the electrical panels. I don't know if the house has a Sylvania panel. Now it's just going to Citizens, but maybe it's $2 million home and it can't really go to Citizens because it's too high value. So stuff like that, we just recommend reaching out to us as soon as you go under contract and just giving us all the information that we need to get you guys the most accurate quotes. Makes the process a lot smoother. But that's really it. So thank you guys.
Quick question.
Thanks, Ed.
Yeah.
Can you verify the flood insurance is from water from any outside source?
Yes.
Okay, so lake, pond, river,
Road.
rainwater.
Rainwater, if it's coming in from the roof, that's gonna be water damage coverage, which is underneath your home insurance. So it's just rising water, any rising water.
Rising rainwater,
Mm-hmm.
Yeah.
right?
Yep.
If it came from a puddle outside.
Yes.
Yeah,
Mhm.
thank you.
Awesome, thanks. All right, so next I want to talk about property taxes. So this, both these items, the reason why we're talking about this can all make or break a deal. How many of you guys ever went under contract and somebody canceled because the insurance was too high, or their payment was too high, or they couldn't qualify? Well, all those things really matter. And this is some of the things that we want to look at ahead of time, right? And a lot of times, I'll tell you, I hate to say this, but probably 99% of the time, the number that I see on the MLS is not the tax bill. That's usually what the seller paid with a 4% discount. Do you know that we don't use that for qualifying? We use the actual number on the tax bill, right? So we have to go and look up the tax bill to find out. So when you're going out to find out if the owner is actually the owner, you can actually print the tax bill right there, which our websites are super simple. We do a lot of properties that are out of state where we have to pull up their tax bill and they have nothing like we have for our counties. So it's Florida, makes it super easy for us. So a couple things I'm gonna talk about is the assessed value, right? What transaction impact, we were talking about that, where we could lose it. And then of course, planning ahead and different options that we can use to figure out what there is available out there for you. So first of all, we have homestead exemption, and I'm sure most of you guys know what homestead exemption is, right? Everybody know what homestead exemption is? Maybe most of you guys, a couple new realtors. So there's 3 things that I'd love to tell everybody about homestead exemption that it does. The first thing is you get $25,000 to $50,000 exemption on your tax bill, which as it reads up there, that's equals to about $750 a year in tax savings, okay? The important part about that is, and I'll tell you, Stephanie, how many people do we call after we tell them to file their homestead exemption in the beginning of the next year that haven't filed?
A lot.
It's about 25%, right?
Yeah.
For about 25% of the people that we call, we send them an email after closing, we send them an email at the end of the year, at the first of the year, we then phone call them and call them and say, hey, did you file for it? And a lot of people go, oh my God, no, how do I do that? And if they don't do that, they're missing out on a tax savings of $750 per year on average. The second thing is, you guys heard of Save Our Home? So our Save Our Home means that when you're homesteaded, and Charlie Crist brought this into plan when he was our governor, but he put it in that when you're in homestead, the max they can raise your assessed value is by 3% each year, okay? If you're not homesteaded, it can go up by 10% per year. So having your homesteaded property obviously keeps you, saves my home, meaning my income's fixed and barely rising. If my taxes got too high, I would have to move out of the state of Florida. So it helps you save your home. It keeps your tax bill low. And the third thing is the Saves Our Home portability transfer. How many of you guys heard of portability? Most of you? Okay. Do you know how that portability works? No? Okay, so the portability works, and this is a huge factor. Let's say that you owned a home, and you lived in the home since the 70s, and your home's old, and it's time to get a new one, whether your kids are moved out or this or that, or whatever the issue is, upsides, downsiding. Well, you get to take the savings that you built up from the Save Our Home tax savings, and that ports over to the new house. And that is deducted from the assessed value, okay? So what's that look like? Well, on the far hand right side, it says cap. What is this? Does anybody know what that is? That is our Save Our Home portability cap. They did not tax them on $116,000 more by it not being homesteaded. So this person who's being assessed at $140,000, or I'm sorry, being assessed at 94, should be being taxed on $116,000. They're being taxed on only 94, which is $210,000. So this person's tax bill is half of what it should be if they didn't homestead their property. Does that make sense? Now that cap, if they buy a new house, comes off of the assessed value. Make sense? So when you're talking to somebody and you go, hey, you're buying a house, you're going from a $200,000 house to a $500,000 house, but you have a cap of 116, means your tax bill is going to be based on a $400,000 house. Make sense? So this is a great selling plan when you're talking to somebody, and then you look at me and you're like, Tony, I have no idea what you're talking about. Well, guess what? You don't need to know. You know what you need to know? You need to know what this guy is. It's a tax estimator. How many of you guys been out to Sarasota County or Charlotte County's tax estimator? Manatee don't have one. Lee County does. You guys seen it? Yep. And if you fill this information out, it will tell you what the tax bill is going to be next year. Whether you're buying a property that's not homesteaded and you're going to be homesteaded, or you're buying a property that's homesteaded, what happens when that same scenario, Mr. Buyer comes and wants to buy a house from Mr. Seller, but Mr. Seller's been there since 1970 and the tax bill says $500 a year. Do they get to keep that $500 a year? No. They're being reassessed at today's value, and the bill's going to jump up big time, big time. This is where this comes into play, that we want to let them know what their new payment's going to be. You guys ever had a buyer call you back and be like, my payment just jumped up, my taxes went through the roof, right? That happens. We probably get the call more than you, right? Because they're like, you told me my payment was this, my payment just, well, but it's your taxes and insurance, let's see what happened. Well, now they started this, Kevin, is this about a year now?
Yeah, it's very recent.
Pretty recent. 2 years, you think? Yeah, it's been recent. They've been adding more and more. I know Lee County had theirs first, and now it's looking like everybody's adopting it. But what you do is you put in the address, and as soon as you start typing the address, it auto-populates it. Why? Because this is Sarasota counties. If you go to Charlotte, it's Charlotte's counties. They know all their addresses. You type in the address, it literally populates, and you put it in. Then down to the bottom, you put estimated purchase price. How much are you buying the property for? Put the property value in. Are you transferring a homestead exemption, a portability? You put yes, guess what happens? It opens a little screen and says, well, what address is that? You put that address and it goes and pulls the cap and it adds it into your assessed value. So it literally is calculating next year's tax bill for you. So if you have somebody that's like, I can't buy a house because the taxes are too much. No, hold on. Let's go see what your taxes will be next year, right? This is. Have you guys ever had somebody say that they can't buy a house because the tax bill's too high? I have, right? And then I go out there, I have people look at, she goes, I have 2 houses I'm looking at, but this tax bill is lower than that tax bill. Guess what? The lower one, when I did this, became higher, and the higher one became lower next year for her. Because the higher one didn't have homestead exemption, and she's gonna homestead it, and the lower one had homestead and the person's been living in the house for a while. So she goes, well, I like this house better with the higher one. But if she didn't know that, she would have bought the cheaper house, which in the end would have been not the house she wanted and a higher tax bill. Yeah.
But is that only effective for like the first year, and then it goes back up to the assessed value?
That's forever. Yes, now the assessed value, if you homestead, can only go up by 3% every year, right? Only 3%. So remember, homestead, and if you guys ever heard Bill First talk, and if you've not, please go and listen to him. He's amazing. He's our county appraiser for Sarasota County. He tells you that, look, if your house value, if your assessed value is not 80% of your house's value, you need to come talk to us and appeal it. We should not be taxing you for more than 80% of the value of your house. That's their goal. They want to tax us on what they call 3-year-old property values, which of course we know the values are weird right now. 3-year property values are about 80% of your value. So if you go and look at your assessed value today and it's not 80% or below the actual value of your property, you should be appealing your taxes to get that bill down, okay? And it happened, it might be happening right now, right? We're seeing some values come down a little bit. We're seeing other houses, people that are strapped to sell houses, selling them for rebates, right? We see that happening. So that could happen. So if you use this, and like I said, Sarasota County, and how do you find it? Super easy. You type in Sarasota County Tax Estimator, be the first thing. Charlotte County Tax Estimator, it'll be the first thing. And literally it's foolproof because you only put a few numbers in and you're done. Type in the address. If it doesn't find the address, it's probably the wrong county or you have a typo, but it will find the address. And then the last one I didn't hit here, it says, will you homestead the property? So if you have somebody that's buying it as an investment property, they'll click no, and you'll probably see the tax bill go up for them. In lending, they're actually talking about us starting to have to use this for approvals. No longer using the old tax bill, but have to use the new tax bill. Okay? Any questions on the tax estimator? Perfect. And like I said, they both have them. And this here is just, so one of the things that Kevin and our whole crew uses, we use something that's called QuickQual. If you guys ever got a pre-qualification from us, it comes over to you and you can access the pre-approval and you can change the purchase price, the taxes, the insurance, the HOA fee, the seller concessions, and then you can scroll down and it will tell you what the payment's gonna be. It will also, there's a button that says closing costs that will tell you how much the borrower has to bring to closing. So the two numbers that we put in when we pre-qualify somebody or pre-approve them is the max payment that they can afford, not purchase price, right? Because we don't know the purchase price, HOA fees, taxes, insurance, a lot of things change. But max payment and max funds that they can bring to closing. If you put those parameters in and scroll down, there's a button that says issue pre-qualification letter. If it's red, it will tell you why. It will say max payment higher than the maximum approved for of $3,500 per month. Okay, so I'm gonna show you guys a quick little video on how this works. If you're not using it, it's great because my contract today was one that was talking about the homeowner's insurance. I was told was $7,200, and the flood insurance was told $4,000 something. It came out to about $11,000. We got some new quotes. We're okay, and the deal's gonna go through. But he goes, he wants to buy this house, and then all of a sudden I get a contract. I'm like, you can't afford it. Well, they went and got some quotes on the insurance, and it was a lot cheaper than they thought. So luckily, but this was what you can use to make that work. So we'll see if we got some volume here.
Maybe at night or over a weekend. Or your buyer needed to talk to their loan officer to get a monthly payment or closing cost estimate before making an offer. Gulfside Mortgage Services has some exciting new technology that gives you and your home buyers the ability to do these things right from your phone 24 hours a day. It's called QuickQual, and here's how it works. When your loan officer completes a pre-qualification for one of your customers, you'll receive an email telling you that you have a pre-qualification waiting for you. On your first login, you'll set a password, and then you'll be able to access all of your pre-qualifications in one place, right from your phone. Just select the buyer you're working with, update the sale price and the property taxes, and you'll instantly be able to see the monthly payment and the closing cost estimate for that exact home. As long as your buyer qualifies in that scenario, you'll be able to push a button and generate a pre-qualification letter on the spot. You can email, text, or print your letter right from the app. And you can access QuickQual from any smartphone, tablet, or desktop computer, so you'll have instant access to all of your pre-qualifications wherever you are. Talk with your Gulfside Mortgage Services loan officer and find out how to get access to QuickQual today.
How many of you guys used it before? No, a few of you have. Angie? No? Anyway, it's amazing. I absolutely love it. The best part I love, thank you, Michael. The best part I love about it is a buyer goes, how much is my payment on that house? Right? I have buyers that are literally looking at 30 or 40 properties and just typing the information in and saying, hey, what do you think? Should we buy it? What do you think? You know, because they know what the payment is, right? A lot of, the big thing that, one of my pet peeves is a lot of people call and they say, what's your interest rate? What's your payment? That's the question, right? What would my payment be? Because do you care if your interest rate's 20 or 2, as long as your payment's right where it needs to be? We care, but right? The bottom line is we're looking for payment, and total payment matters. Taxes, insurance, everything. Once again, just the last thing I want to touch on is the tax estimator. Please use this with your clients, right? The last thing we want somebody to do, and this is my big goal, is the last thing we want to do is put somebody in a house that they can't afford next year, right? And if that tax bill jumps up or doubles and they can't afford it and they can't make that payment, then they shouldn't be buying that house. And that's the last thing we want to do is put people in the houses they can't afford. And I've seen it, that they've moved up that high.
What if
Yes.
you're helping someone in new construction and that address doesn't have?
It does come up, but
It's
if,
just assessed on
Yeah.
the land, right?
it will be, but when you put the purchase price in, they're gonna assess it on the purchase
Okay,
price.
So it'll adjust.
Yes, thank you, I was gonna bring that up, thank you so
Okay.
much. So yes, if you have new construction, perfect tool. This is exactly what we print and give to my underwriters, is this tool.
Okay.
So we put it in with the information, how much they're buying it for, and we print that off. And I didn't show a picture of what it looks like, but literally it looks like a little tax bill template. The non-ad valorem, the ad valorem, and the total, so it shows everything. So if it's in a CDD, it actually adds that in.
Oh,
and
will
shows,
auto
yep,
put that in?
yep, it pulls it all in.
Oh, that's nice.
Yep. So go out there and check it out. And if you have any questions, let us know.
How many times
And we already seen that. Here's Sammy's information in case anybody needs it. We're gonna send it out for everybody. Oh, I messed up on your.
It's okay. It might have been me.
It rolled around.
Anybody got that? Need that? Actually, it's on your little card too, right? Oh, you guys have it on the card too.
I have more in the car too.
And then there's us. So anyway, any other questions anybody has? Awesome. Oh yeah, Michael.
When's the next class of mortgages, like we were talking about the different mortgages again? That was a great class. I think a lot of people get a lot out of that. How you did, like the investment mortgages and the FHA.